Welcome back to Factful Finance, where we empower you with the knowledge to transform your financial future. Now, let me ask you something. What's the real reason so many people miss out on the wealth-building power of the stock market? They think it's complicated, too risky, or something only for the rich. But today, I'm about to prove that anyone, yes, even you, can start investing in the stock market, no matter your experience level. Now, you've probably heard a lot of people say, investing in stocks is for the experts. And while it's true that there's a learning curve, you don't need to be a Wall Street pro to make smart, informed decisions. In fact, over 90% of millionaires have built their wealth through the stock market, not by stashing cash under a mattress or relying solely on real estate. But how do you actually get started? Well, let's break it down in the simplest, most actionable way possible. First, let's cover the fundamentals. When you buy a stock, you're essentially buying a tiny piece of a company. That means if the company grows, you benefit. If it fails, you lose. The goal is to invest in companies with long-term growth potential, not gamble on short-term trends. But before we dive into which stocks to pick, you've got to lay the groundwork. And that means understanding risk and deciding how much of your money you're willing to put into the market. The first step? Establish a solid emergency fund. Before you even think about investing, make sure you've got at least 3 to 6 months worth of living expenses saved up. This ensures that, in case of an emergency, you're not forced to sell your investments at a loss to cover unforeseen costs. Now let's talk about choosing a brokerage account. There are tons of options out there, from traditional brokers like Charles Schwab to modern platforms like Robinhood or E-Trade. When selecting one, consider factors like fees, ease of use, and customer support. Don't just go for the app that looks the coolest. Check the fine print on commissions and any hidden costs that might eat into your profits over time. Next, you've got to make your first stock selection. This is where most new investors get overwhelmed. There are thousands of stocks to choose from. So how do you even begin? Start with index funds, or ETFs. These are baskets of stocks that track entire markets or sectors, which gives you built-in diversification. Think of them like a basket of apples instead of just one apple. If one apple goes bad, you've still got a bunch of good ones. But what about picking individual stocks? Here's the thing. Don't jump into picking stocks just yet unless you've done your research. A great starting point is focusing on companies you believe in, ones you interact with daily, like Apple, Amazon, or Microsoft. Study their growth trends, their leadership, and their position in the market. For example, take a look at Noah, a tech enthusiast who decided to invest in Apple after doing research on their innovations and strong track record of growth. Fast forward a year, and Noah's stock has seen a healthy return of 15%. It's not just luck, it's about understanding the business behind the numbers. So now that you've chosen a platform and picked a few stocks, how do you actually buy them? It's simpler than you think. With most brokers, you can just search for the stock symbol, like AAPL for Apple, select the number of shares you want, and place your order. One tip, always double-check the type of order you're placing. A limit order lets you specify the price you're willing to pay, while a market order buys at the current price. If you're just starting, limit orders can help you avoid paying more than you want to. But here's the kicker. Don't get greedy. Investing is a long-term game. The stock market has a historical average annual return of about 7% after inflation, so don't expect to become a millionaire overnight. Start small, be consistent, and stay disciplined. Over time, the compound growth of your investments will work its magic. Still, even with all this knowledge, it's essential to diversify. Don't put all your eggs in one basket. Spread your investments across different sectors, industries, and even asset classes, like bonds or real estate. This helps minimize risk and keeps you in a position to weather market fluctuations. And remember, it's okay to ask for help. Whether it's a financial advisor or online communities like Reddit or Seeking Alpha, there's a wealth of information out there to guide you. You don't have to go it alone. But at the end of the day, it's about taking that first step. The stock market may seem intimidating, but once you get started, you'll begin to see just how accessible it really is. So what's the next step for you? Drop a comment below and let me know where you're at with your stock market journey. I respond to as many as I can. Let's make sure you're on the right track. If this video helped you, smash that like button and hit subscribe. Trust me, you don't want to miss what's coming next. It's time to take your financial knowledge to the next level. Remember, this content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. And if you found this helpful, there's a video on screen right now that will take your investing skills even further. Check it out now.